Hi everyone, Eric here. Today, we're going to discuss why Amazon is worth $1 trillion, and even crazier, why that number may look small in a couple years. Today, we're going to analyze Amazon's business model and financials, compare it to the competition, and then talk about the outlook for the company over the next 10 years. First, we'll talk about the scale of Amazon. Amazon is huge. But to understand just how big it really is, you need to compare it to a handful of the world's other largest tech companies. So here are some of the largest tech companies. This is a list of them. You'll see their 2019 revenue growth rates, market caps of these companies as of May 18th, 2020, and the ratio of the market cap divided by revenue, the classic price to sales ratio. So here in the revenue, you can see that Amazon isn't only the largest tech company in the world, it's the largest by a big margin. It does Facebook's annual revenue every 3 months. You can also see that Apple was the only company close to Amazon in 2019 in terms of revenue, but actually had a negative growth rate. In addition, as of 2020, Amazon just announced that their Q1 2020 revenue grew at 26%, whereas Facebook in Q1 just announced that their revenue grew at only 18%. So it's also the fastest growing company in the entire group. You can see that Amazon is worth over $1 trillion, but so is Apple and Microsoft. But if you look at the price to sales ratio, Amazon actually trades cheaper than any other company. So is Amazon really worth $1 trillion? Compared with other large tech companies, the $1 trillion valuation actually makes sense. But how is it possible that a company this giant has accelerating revenue growth? Let's take a look by talking about their business model and reviewing their Q1 2020 financials. Before we jump into the financials, I want to talk about Amazon's business model. So as a company, Amazon has 4 ways it generates revenue. The e-commerce, subscription, and advertising businesses are all interconnected. Amazon Web Services is a completely separate company. So first off, let's talk about the e-commerce platform, which is Amazon.com. Amazon sells nearly 40% of all goods sold online in the US. So this is, of course, the largest piece of their revenue. Then you have subscriptions, so people pay monthly Amazon Prime subscriptions to receive free shipping and access to services like entertainment. Advertising. Advertising allows sellers to advertise on the Amazon platform. While this is still, quote unquote, according to Amazon, a small business, Amazon is actually becoming a search engine. People go directly to Amazon.com to search for products they want to buy, rather than searching on Google. For this reason, Google has named Amazon as their biggest single threat. The Amazon website has a 10% conversion rate, meaning that 10% of the traffic that goes to the website buys something. So you could see why this would be a great place to advertise. Next, you have Amazon Web Services. This is the world's largest cloud infrastructure company, generating more than $10 billion in revenue a quarter. They were laughed at for investing in launching AWS in 2002 by other competitor companies such as Microsoft and Google. AWS allows customers to pay to use Amazon's cloud-based infrastructure to build and manage their own applications. This was a cheaper, faster, and safer solution for businesses who couldn't do this themselves. AWS operated with no competition at all until 2008. Which is why they dominate this market today. In 2016, AWS did $10 billion in annual revenue. Now it does $10 billion in revenue a quarter. You also have Jeff Bezos. So Jeff Bezos is the CEO of Amazon. He has never really allowed the company to turn a profit. Every quarter he says the same thing, that Amazon will reinvest basically its entire cash flow into growing the company and drive its net income down to zero. For this reason, Amazon is famous for having quote unquote no profits and also paying no taxes because they have no profits to pay taxes on. But they grow every single year like clockwork. If you like this content, hit the subscribe button right now to let me know, and I'll keep producing more videos like this. Now, let's look at the actual Q1 2020 financial report. Here you'll see the financial results for the 3 months ended March 31st, 2020. I've summarized some of the financials in this spreadsheet from the Q1 report. As usual, they turned a small $4 billion profit, which for them is small, but announced, just like on every earnings call, that they will be quote-unquote not making profits in Q2. So let's just focus more on the revenue because they don't have many profits to speak about. In North America, the e-commerce business did $46.1 billion at 29% growth. And remember, this is happening during a time when the global economy is in a crisis. Outside of North America, the e-commerce businesses did $19.1 billion in revenue at 18% growth. And AWS crossed $10 billion for its first time in a quarter, growing 33%. They also provided a breakout so that we could see the subscription and advertising businesses, those businesses that are part of the overall e-commerce business. Subscription revenue grew at 28%, and the advertising revenue grew 44% to nearly $4 billion. And the CFO again described the progress as quote-unquote early days, despite it being the third largest advertising platform in the world after Google and Facebook. Finally, what we're going to do is we'll look at Amazon's market share in US e-commerce because it's really, really fascinating. So in this comparison, we'll compare the US and Chinese retail markets, which are the two largest retail markets in the world, as well as the largest e-commerce companies in each market, which are Amazon and Alibaba. So in the US, about 17% of retail sales will happen online in 2020. You can see the trend here between 2010 and 2019. So that's up from just around 6% in 2010. So 17% may sound high, but it's actually one of the lowest of any countries. In China, nearly 24% of retail sales happen online. That statistic is actually closer to many of the other countries. So now let's look at each of these countries in their markets and their market share. So in the US, Amazon controls 38% of the e-commerce market, whereas in China, Alibaba controls 56%. If you multiply the e-commerce penetration rate by the market share of each company, you can see, okay, what percent of retail sales does each company actually represent? So you'll see here that Amazon only controls 6.5% of retail sales in the US, whereas in China, Alibaba controls 13.2%. The point I'm trying to make here is that Amazon can get a lot more market share. I don't know how much, but they effectively have no competitors in the e-commerce space in North America. Now we're going to discuss the future outlook for Amazon and some of the other largest tech companies. When you see that $280 billion in revenue in 2019 represents only a tiny slice of e-commerce and that AWS is growing like crazy, you can see why Amazon is worth $1 trillion and why they could double, triple, 5x, or maybe 10x their revenue from here over the next 10 to 20 years. When we think about competitors, Apple hasn't grown its revenue in multiple years. In fact, it may even be shrinking. Unless they develop some great new products or make some acquisitions, I'm not sure they have a clear path to continued growth. Google, on the other hand, will likely grow steadily from search and YouTube as more people get access to the internet. But they do have more and more competition and are completely blocked out of valuable markets like China. They've had a monopoly on search for 20 years. So honestly, I think their biggest days of growth are behind them. I don't see a 10x in revenue in their future. Facebook is in sort of a similar situation. Facebook already has 2.6 billion monthly active users, and they've announced that they have maxed out the quote-unquote ad load, or the amount of ads they can show to users. So again, they will probably grow steadily, similar to Google, but with a lot of business risks around data. Microsoft competes with Google, Apple, and Amazon, and has a good suite of products, but they're barely growing 10%. They'll do fine over time. But Amazon is really the only company in this group that has a very predictable path to 20 to 30% growth every year for an extremely long time, unless it gets broken up by the government, which really is a risk for all these companies. So while Amazon currently has a 1 trillion market cap, that number may look small in 10 or 20 years from now. It is a company of unprecedented scale, but looking at the market size and market share, the company may still be in its infancy. That's it. If you enjoyed this video, please hit the subscribe button right now to let me know. And if you're interested in improving your Excel skills, I produced a course that teaches the 20% of Excel used for 80% of business. Take a look at the link below, and thanks for watching.